we got to turn our attention to what's going on in the crypto corner because Bitcoin, it's trading lower right now. But look, it's not far off of the $40,000 mark. But let's talk about what's going to happen in a greater context with crypto. And we're going to do that with Alex Mashinsky. He is the CEO of Celsius. And the potential for crypto to be used on different platforms to pay for stuff, not necessarily a pure play to just buy the crypto coin, but to use it. Do you see that taking on greater relevance?
Well, so crypto's main purpose is a store of value, right? It is not an exceptional form of payment. I think the dollar is the opposite, right? It's an exceptional form of payment, but not very good store of value. So I think there are many, many other cryptocurrencies or digital assets that serve that purpose better, mostly stable coins and other forms of digital assets. So I don't think you want to take this pristine asset and try to use it to clean the windows or do something else with it. It is very good for one thing, store value, and that's what you should be using it for.
Alex, we're looking at a chart here of Bitcoin right now. It's trading just below 40,000. I guess, what do you think is going to be that next catalyst to get it above 40,000? We were briefly there last week, although it didn't hold for too long.
Yeah, so earlier this year, I talked about it kind of resisting going below 29,000, and we've seen that big jump since. And I think we are hitting some resistance here in the 40 to 45,000 levels. And there is a lot of resistance above that. So I think we're going to consolidate here and then break the new highs. I still stand by my prediction that this year we will see anywhere between 140 and 160,000 per Bitcoin.
I think there are a lot of people cheering what you just said. Your platform, Celsius, deals with so many people who we refer to as the unbanked. Are they going to be able to get in on this? They can via the platform, can't they?
Yeah, so most of what we do is enable the average person to earn a yield on their digital assets. We have almost 1 million customers in 170 countries. Just over 17 billion in assets, in total assets, and we generate yield. We pay 8.8% on stablecoins, for example. So that's 30 to 40 times more than your bank pays you. And we pay 6.2% on your Bitcoin. So what Celsius does better than anyone else is give you that yield, give you that return on your capital. And we do it in 3 buckets. One is, again, stablecoins. We have 12 different forms of stable coins, 3 different forms of gold. So you can now earn 5.5% gold on gold, or you can venture and choose between 32 different digital assets like Bitcoin, Ethereum, Litecoin, and so on. Those are the unique things that Celsius does that better than anyone else.
What about the infrastructure bill? Because it does include new crypto regulations for revenue. I guess, do you view this as a headwind, or how big of a challenge could this potentially be to crypto going forward?
Look, for those of us who pay taxes and report all of our transactions, nothing in that legislation is new or different. I think Treasury and some of the other departments are trying to make sure that they collect all the taxes that are due. And at Celsius, for example, you do get a 1099 at the end of the year that tells you exactly how much you earned in yield, and you do have to pay taxes on that. So I don't see, there's no impact to us. We've been following regulation. We've been doing KYC and AML services since 2017. So none of these new regulatory requirements make any difference. And I think clarity on the regulatory side is a very good thing. It's a positive. Now, I heard some people talk about mining and how it's going to impact mining. Celsius has over $200 million invested in mining. We're one of the largest miners in North America, and I can tell you that this new regulation does not hamper or slow down any of our activities. We do have to report income. We're going to pay taxes on it, and we're happy to do it running a profitable business.